got caught up in some things, so I didn't start that thing right at 1:30 Eastern time. But it's been kind of watching things. It's been interesting looking at the Russell 2000 futures right now. There was a big spike up right here, starting at like 11:30, which is right about 1:30 Eastern time, as people came back from lunch. The markets have been, pretty in a pretty pronounced downturn late morning until now. Was looking like the market, everything opened up, but as you can see, VIX is up, the VIX futures are up. Dollar index is basically flat. It's been acting kind of strange. It hasn't really been moving one way or the other. Yesterday it had its biggest move up in a 4-day. It's been moving up 4 days in a row, and yesterday, or it had been, and yesterday was a big move up. And now today it's just sort of consolidating the dollar index anyway. And right now I'm in a trade on the Russell. I sold calls against my Autodesk because that expires tomorrow. I wanted to kind of take advantage of some of this bearishness to offset some positive delta in my portfolio. Win has been down all day. And as you can see, I made a couple mistakes trading futures, trading the Dow 100, not Dow 100, there was no Dow 100. The mini Dow futures had some challenges there, just with big spreads, big movements. Just didn't handle it tactically very well. So right now I'm just trying to settle in, get focused, get discipline, close the day out strong. I have been trading with a wireless trackball, but I switched over to just a regular mouse today because the trackball just has been giving me some problems. If I'm used to a cursor moving like this, and I'm putting a bunch of effort to make my cursor move like this, that gets frustrating. And if you like trackballs, I'm sure they're not trying to talk you out of them. I've liked trackballs. I just think that this particular trackball that I'm using, it has these 3 points that the trackball rests on, and those points get dirty, and when they get dirty, it becomes less responsive. So it's not a problem popping that trackball out to clean them, but when you have to do it, 3 or 4 times a day, it's frustrating. I'd rather just not even deal with it. So this is a good move to the downside on the part of the Russell. This is moving a lot more orderly than the Dow futures were, and it's not like Dow futures are that high in volume, but I guess they're higher in volume than the Russell. Okay. once I feel like I can take my eyes off this trade, I'm going to pull up that version of the chart I was just looking at and go through the Dow, the NASDAQ 100, this S&P, and the Russell, and just kind of go through where they are in those trend channels that I drew. That's my big tool I've been using to kind of monitor this action ever since last Friday when things took a turn. So that bracketed exit order did exactly what I wanted it to do. I set the reason why I created that was because I was getting tired of putting a limit order. So you saw what I did, and I put my limit order here at 1482. I was tired of watching it hit that and then back off. Like when you pick the lows, kudos to you. But the problem is, keep in mind that just because the symbol trades down to that level doesn't mean there's going to be a tremendous amount of volume at that level. And so if you've got a bunch of other orders ahead of yours, it can hit that level and you were right, but you're going to miss out. And you can watch, like look what it's doing here. It's reversing. So there's nothing more frustrating than being right and watching your profits evaporate as it turns against you because it hit that level and now it's ripping back against you. So what I did was I basically created a bracketed order, which is I can click here, I can set my limit, but then it creates another order which is like 4 ticks above it, or it's on the other side of it. And I set it as a trailing stop, and I normally don't like to use, here's the problem I have with trailing stops. If you don't set it wide enough, see if you set it too wide, then that may be more risk than you're comfortable with. And if you don't set it wide enough, given just the natural volatility of whatever it is you're trading, if you don't set it wide enough, inevitably you're going to get stopped out, and it's probably going to be at a loss because you didn't let the position sit there long enough to really mature a season, however you want to put it, and like move to profitability. Sometimes that takes time. So I like setting, when I do this pincher order, like what I'm talking about, I like setting a trailing stop so that if it's moving in my favor, that stop is moving down. And as that stop moves down, every tick it moves down means that's another tick of profit I get to keep. I don't want to give back any more profit than I really need to. And I've messed around with that a little bit. I've like manually taken it down so it's only 2 ticks. The setting stops is an art. And yeah, there's a science to it. Like there's formulas that you can use. Some people say whatever the ATR is, multiply that by 3, multiply that by 4, multiply that by 5, and that's what your trailing stop should be. So if I'm trading on a 15-minute chart here, and the ATR is 6, all right, so 6.5 times 3 would be 20.5, or would be 19.5. So call it 20. So I would set my stop or my trailing stop at 20. If it was a stop that didn't trail down, you might apply a different formula because you wouldn't necessarily want it to move. You're hoping it moves somewhat in your direction. You want to give it a wide enough berth that it doesn't stop you out. And on days that are extremely volatile, you might even want to set your stop a little bit wider. So all 11 sectors are down right now. Except for utilities. Utilities is up a penny. But, it's been consistently red all day. If I pull up a heat map, just a sea of red. There's the Dow, there's the NASDAQ 100. The Russell. On a day like today, something like this can be helpful because it shows you what's bucking the trend. Grubhub, and I wonder if they announced if they had earnings today. They did. So they're up on earnings today. They reported before the bell, and looks like they beat by a nickel. So that's just a real nice visual way to kind of call your attention to some outliers or some issues that are bucking the trend. The bigger the square is, the higher, the better, the greater they are on volume that day. New York Times, the purveyor of fake news, they had a good, I'm saying that tongue in cheek, they had a 39-cent, so they beat, by 6 cents, call it. It's not showing sectors, these S&P sectors for some reason. If you want to take on some risk, look at the micro caps. Yeah, everything green is green. It had earnings that look, not everything, but so far everything we've looked at. So, what does that tell you? That tells you that today is a very bearish day. Fiserv had earnings yesterday after the bell, I'm sure. Yeah, so it's up today. It beat by 4 cents. And obviously you're going to want to look for bright green. You know, I mean, you want something that's not just bucking the trend, but like really screaming. And, you know, the better the volume it's doing, the better for you. I don't know why it's not telling me what the estimate was. We do know it reported earnings before the market. It reported 22. I don't know what the estimate was. Probably lower than 22, unless they met and then they just offered, you know, strong guidance. But keep an eye, you know, that's a way to screen. Just one screening tool. So right now the Dow is moving back towards that midpoint of the price channel. RSI shows it's moving back towards being oversold. It was briefly there. The blue, that's what this blue here represents. I don't know why they picked blue for oversold and green is better. But if I look at the NDX, and the composite as well, those are two indices. Well, everyone else was falling back into the channel. The S&P was doing it. The Russell never broke out, so it didn't have anything to move back into. The Dow did it. The NASDAQ 100 and the composite have stubbornly refused to fall back into that channel. They hit it almost to the tick and then bounced off of it. And today, you can see the NASDAQ is right now trading in that channel. I'm going to watch it and see if it closes, because if it closes there, most likely what's going to happen is it's going to rotate down to the midpoint. It's going to rotate down to about here. how long it's going to take. I mean, if it were to do that, that'd be about a 400-point drop. That's pretty dramatic. 430-point drop. You know, that might take 3 or 4 days to do. I wouldn't expect that to happen. And if it happens, if something like that happens in a day, you know, that would be very worrisome. You know, that would be like, this is not a healthy correction. This is something's broken. So the last 2 days, the S&P was trading out of its channel. It's now back in its channel again. If it closes below, I would expect a rotation at least down to this midpoint. Possibility that it could rotate, continue to rotate all the way down to the bottom of the channel. If any of these close below the bottom boundary of the channel, then that is a definite bearish signal. That's basically saying it's breaking the trend. Now, if that were to happen, so this is a channel that was drawn on the daily chart. If that were to happen, I would switch over and I would take a look at the weekly chart, because that's a longer term view. So that would be, you know, probably below 25.26. But at 25.26, no, that would still be below even the weekly channel. So a break below actually, I misspoke on that. The daily channel actually has a lower boundary than the week. So a break below the week trend would be meaningful. I would watch it for continuation through the bottom of the daily trend. And at the point that happens, then that would be a strong bearish signal. And in that case, I would expect a rotation down to the 200 period MA. And actually, I think for me, this is a 243 period MA, because I do things powers of 3, 3, 9, 27, 81, 243. Roughly equivalent to your 10, 20, 50, kind of 100, 200. Kind of halfway between the 50 and the 100. So the Russell right now is trading in this little spot here. You know, it 2 days ago broke through and then rallied and closed above the channel. Today it hit it almost exactly and then has bounced off, and this is where it is right now. If this closes above this boundary, then I think that's a potential bounce to the upside. I would want to check other indicators for some kind of a confirmation, because by the same token, If the Russell were to close below this boundary, that would be a very bearish signal for the Russell. So Facebook, I haven't put my Twitter on yet. I was going to do like a Twitter long and do like a pairs trade because Twitter seems to be showing relative strength to Facebook. I haven't done that yet. Facebook has just been, it's been kind of meandering. It really hasn't been doing a whole lot today from the standpoint of this put spread that I bought. So Wynn's been giving me a little bit of a gift. It ripped against me yesterday because the night before the announcement was that Steve Wynn was stepping down as chairman and CEO of Wynn and Wynn Macau. So that stock was up, I don't know, it was up 10% yesterday or something. That really hurt me. I was a bearish position. It's coming back in now simply because of just the bearish day that we find ourselves in. In case you missed it, Twitter reported earnings today. They reported, everyone's excited because they reported their first net profit ever since IPO. They were up as much as, I want to say that was about 20% when they were trading around 35. So Twitter, if it's independent of a pairs trade, if you're thinking about how to play it, I did a Netflix trade and I was expecting that Netflix would just trade up and then pull back as people take profits. And Netflix defied my expectations. It continued to be very bullish for like 3 or 4 days afterwards. I don't think that Twitter's doing that, which isn't surprising because we're in kind of a strain. We're in a very the climate that we're in right now is not the same as it was even a week or two ago. If things turn really bearish, then I would, like Twitter, I would watch as a rotation to fill this gap before it starts climbing higher again. And it might even do that anyway over time, over like the next month or so. You know, if we look at time frames, this is telling me some profit taking. Expand. Maybe if I just draw a quick regression channel here. That's not what I told you to do. I got something lagging my system. Like when I try and figure out how long something's going to take to get to a price level, I'll usually draw a regression channel like that, and then I'll pin that price level, on my chart, and take the middle, zoom in like the middle of that, kind of the midpoint of that regression channel, and that's like this crossover. So basically what this is telling me is, okay, I think that if this price trend continues, which is 2 data points, it's not trend makes, but just for preliminaries, this tells me it can trade down to the level by like the 13th. So, next Monday, what is that, Monday or Tuesday? So just one way to, plot it and kind of figure out time frames. Sometimes you can eyeball it. I don't have a good eye for that. That's why drawings help me. I haven't had a chance to read this yet. Something about, oh, this was written by Dick Beauvais. So he's a pretty well-known analyst, and he covers banking. He's probably talking specifically about how rates are going to affect the banks. So I think a lot of people are just like, oh, banks, rates going up is great for banks because it means that they can, command higher. They can basically they can lend money out for higher spreads. Sometimes it helps my lag if I just minimize everything, because you can. I don't know what it is about Chrome. It's creating so much overhead. The Russell just tried to rally, and it may still. But it looks like it's going to give up the ghost here shortly, especially if it trades below here. But right now, no, it's showing. Ideally, full D is, you probably heard me say over and over again, needs to cross into oversold territory before I should. That's my system. That's my discipline. Before I should do anything. Yeah, it's really time to sell calls against this VWO. Everything here is very bearish. I'm not going to wait for, this is all I need to see. I'm not going to wait for perfect trade location. See, I think it's going to get down to about the 45 level. Good, I got $1.10 at least. Even though it's not positive, Apple is bucking today's trend as well. I think a lot of that has to do with the fact that it just got hammered on earnings. I mean, it hit the number, but there was a lot of concern about iPhone 10, not having, like, they're getting a higher average price now than they were a year ago, but they're not selling enough units. So, this iPhone 10 super cycle everybody's counting on maybe isn't going to materialize. If you ever question the value of Fibonacci's, I mean, take a look at like a real world example. Here's one where the 61.8 level held, but then it broke. But it did help. It was resistance or was support. Now it's resistance here, and then the 50% is kind of porous. 38.2 didn't really do anything, but then that was on the second. That was Friday, so there was nothing was safe then, and it hit. Looking like another rotation down eventually. What I probably should do is sell calls. I might do that tomorrow morning. I mean, the option I'm sitting on expires tomorrow. Because today looks a lot like yesterday, I don't think it's unreasonable to expect a pretty uh, rough and tumble last 15 minutes of the day. Expecting selling pressures to mount. That was a nice little trade. And honestly, I probably could have stayed in that down to the Bollinger Band here. But it's probably good I didn't stay in it too long, because I mean, you can see it, you know, retraced that move quite a bit. So better to have, taken my profits and held on to my, whatever that 180 dollars of profit. Still haven't dug myself out of the hole. You know, my bad mini Dow trade. Oops. Okay.
Line 4.
Don't know for sure why my Bluetooth headset wouldn't be showing up on there, but That might have saved me some grief. See, right now the S&P is showing signs of rebounding from this move down. So right now the ticks are bearish. Oh, I just got robbed on that. That's the problem putting market orders in when things are moving so rapidly, is you don't really. I just got totally pickpocketed. Good news is wind is helping me out here. VWO not so much. That call I sold on Autodesk is helping out. Now things have taken a decidedly bearish turn again in the S&P futures. I don't like that at all. Quite honestly, this is probably not the best place to be taking a stand. I'm liking the Russell right now better for a play to the downside. This is the same kind of selling that we saw yesterday, except that I think it's happening. This is happening earlier. It wasn't like this until like the last 15 minutes of the day yesterday. Which this is 130 bar, which is the bar that we're in right now, except this is yesterday. This was the last 15 minutes of trade. The Dow's down 754. Dow futures are down 640. Russell's down 2. Russell futures are down 1.5. Yeah, it's just all, it's deteriorating. There's a part of me that says we might see a late, rebound in the last 15 minutes, but I wouldn't bet on it. Okay. I'm gonna have to work on how I place that. Because it's real, I'm walking away with just paltry profits for the amount of risk that I'm taking. Like, I expect to see a lot more profit. So Apple is succumbing to this sell-off. It was down only 30 cents at one point. But, I mean, pretty much everything's getting taken out. Now remember, that was one I said, I want to get out of that. Like before today's close, because I don't know what tomorrow brings. And I think I'm still going to do that. I think what I want to do, because this expires tomorrow, I think I want to sell this, take what profit I can for the day on it, and then take a look at maybe putting on a bearish position on when every little bout of buying is just immediately hit with this huge wave of selling. This is longs capitulating, trying to get out. See, if you watch it on this chart here, this is 333 ticks. Tick is a transaction, and then a new bar paints after it does that number of transactions. You can see that it starts to make a run and then just gets batted down again. Okay, so I got out a win. So $340 profit today, which, and I took a loss on it. Autodesk is helping me, Facebook is helping me, Apple's not because that's positive delta on Apple. NASDAQ is trying to pick itself up. NASDAQ futures. So Dow's down 850. So we're going to hear more calls today of, oh, this was the, second largest point drop since whatever date, and I don't care because we're at over 24,000. 850 doesn't scare me. 1175 was scary, but it wasn't like it was scary. Like 1175 in terms of percentage was less percentage than the largest point drop in the Dow in 2000. I don't remember if it was 2007 or 2008 that it occurred, but it was right before it was the Great Recession. Um, it was 888 points. All right, I'll take this 873 over that 888. I don't want to hear that it's the where it sits in terms of the point. It doesn't matter. Stop trying to sell me antidepressants and tell me the truth. Put this in give it some perspective. It's like a punch-drunk boxer. It just can't get up. Of course, now's when it proves me wrong. So you saw that tremendous wave. Well, I don't know if you can see it because the chart's not drawing properly. It's not keeping up with what's really happening. That's painting very slowly, and that's not a problem with my computer. That the broker acknowledged that as a problem. They've acknowledged it since the 24th, and can't seem to find the resource to fix it. So apparently their developers have other more important things to work on. I'm not sure what that would be, but so anyway, yeah, interesting day. So this just caught my eye. The NASDAQ 100 down, not that the NASDAQ 100 and the composite are down almost the same amount, but that the NASDAQ 100 is down 275 points. And the reason why I say that is because I pulled up that one chart and I said the NASDAQ 100 has about 450 points to go to, if it rotates down to this midpoint, because at the time it was at 64.33, I said that would be a 400 point drop, or 430 point, yeah, about a 430 point drop. Well, guess what? We just got 275 of it. That's only another 125 to go. So it was, yeah, I was complaining earlier about, it's only 150 points, but I mean, this is still a rout today. Dow down 4%, NASDAQ 100 down 4%, Composite down 3.9, S&P down 3.75, the Russell down at 3, just shy of 3. The Russell is the one that's showing the most relative strength still. And I believe that the Russell's the one that's leading the way. If there's a true breakdown out of price channels, the Russell's going to be the first one doing that. If there's a rebound that takes us out of this correction, it's going to be the Russell. The Russell closed below that price channel. Okay, yesterday it touched, or not yesterday, 2 days ago it broke through but didn't stay down there. It closed above. Today it closed below. The Dow Jones touched, it closed at that midpoint. That was where I was telling you it was going to rotate down to. The NASDAQ 100 finally did the right thing, and the composite too finally did the right thing and closed in that channel where they belong. So now it's going to rotate down to the midpoint. The S&P closed below its midpoint. It closed below the Bollinger Band. It closed below the 81 period moving average. And again, the Russell, the VIX, 24% up. The VIX futures, 22% up. The VIX is back up to 34.62. The VIX futures are back up to 28.75. Volatility has not gone away. Now, there are people that are saying this is a healthy level of volatility. They're probably right. That suppressed level of volatility for so long was not healthy. It was very unhealthy for these markets. So, yes, this was a rough day for the bulls. If we look at sectors, everything down. Not a single sector escaped the sell-off today. This is what I said needs to happen. Okay. In addition to that, the energy sector crossed into oversold territory. Materials crossed back into oversold territory. Industrials crossed back into oversold territory. Consumer discretionary didn't cross yet into oversold territory. Still needs to. Consumer staples probably crossed back into it. Healthcare, touching it. Financials, touching. Information technology, touching. Telecommunication services, close but not quite touching. Utilities, they were, down and oversold, staying there. Real estate, sold into oversold territory today. This correction will not be complete until discretionary, healthcare, financials, and information technology do the right thing and cross into oversold territory. There are still some weak hands in the market. Once those are flushed out, then a new wave of buyers can come in and drive this thing back up to the upside. Now, I'm not saying that's going to happen anytime soon because there's still the danger that this is more than just a sell-off, that this could be, and this is more than just a correction. Correction is a 10% decline from peak to trough. This is 10.5 on the Dow, and it was 10.5 earlier, on 2 days ago, at the bottom, before it rebounded. NDX at the 10.2%. That's the NASDAQ 100. The S&P 10.2. The Russell 9.4, so not quite an official correction in the Russell. Again, these are just definitions, but everyone gets real cranky when you don't use the right word. Don't call it a correction if it's not a correction. You know what? The bears are firmly in charge. You can call it a peanut butter jelly sandwich, it doesn't matter. And here's what's interesting. Okay, the dollar really didn't do a whole lot of anything today. The dollar's up 9 bips. Okay, yesterday, when we saw that accelerated selling into the close, the dollar had its best day in a 4-day run up. It's still up, so it's still a 5-day run up, but this was a huge day for the dollar yesterday. doesn't necessarily mean that the dollar is no longer the leading indicator that I've declared it to be. But this kind of move, you know, on the back of dollar, a decline in dollar's relative strength is interesting. It's an interesting development. The Japanese yen had a good day today. I've read read this morning that traders are they're flocking to the yen over the Swiss franc as a flight to safety. The Swiss franc was up, although the Swiss franc was up 68 bips, the yen was up 52. Gold up 43 bips. Those are the futures, by the way. Bitcoin up a percent. Bitcoin futures up 1%. You know, that's not a flight to safety trade at all. You know, Bitcoin is not a store of value. It is not the digital replacement for gold. So, is this a rotation that we're seeing? Risk, money looking for risk. Is it rotating into Bitcoin or cryptocurrencies? I mean, from an institutional standpoint, no. But there's nothing stopping institutions from betting on Bitcoin futures. So where is risk parking its money right now? That's the question. All right, folks, we're going to call it a wrap. Good day today, interesting day today. I think the market showed a little bit more of its secrets. It never tells everything to you all at once. You know, you got to put the puzzle together. So, you know, we'll get back together here and we'll do it again tomorrow. Have a great night, everyone.